I mean, you can't beat that. And today the market is up pretty significantly, crypto, of course. And we got a lot to go over. We're going to go over a couple things going on with Elon Musk. I don't know if you guys have seen, but he didn't tweet for a while. Then he started tweeting about Dogecoin and Bitcoin and crypto. And then all of a sudden, we didn't see the market react as much. So this Elon Musk effect that everyone's been talking about for months now potentially is losing steam and could be dead. So probably doesn't make him too happy. He probably likes being able to tweet and the market freaks out, but not happening as much. We're also going to go over a couple of new details revealed with the IPO document from Robinhood. A couple of key things going on specifically with their crypto business, which made up about 17% of their revenue in the first half of the year. So we're going to go over that. A couple things with Dogecoin, with Robinhood specifically. Is Robinhood the Dogecoin whale account? Because everyone's saying they are, but we're going to break down the specific numbers, look exactly at how much percent the Dogecoin wallet is in terms of the whale account, how much percent of Dogecoin they own, and how much Dogecoin that Robinhood owns. After that, we're going to go over a major announcement with Cardano, a couple things with Bitcoin mining and regulations. But if you guys are just joining us, if you can, please be sure to like the video. I'm getting tired of seeing these comments saying, why do your videos not get as many views when you have a lot of subscribers? I don't know. Is it because people don't like the videos? Is it because YouTube deleted my channel when I did a video on Elon Musk and Dogecoin? I think they're all possibilities, but I honestly have no clue. I'm just going to keep posting videos regardless. And if you can, please be sure to like the video and subscribe. But let's just get right into it. So right now, the entire crypto market is up nearly 5% this morning. Let's refresh it. Up about 4.4%. And we're seeing Bitcoin up 3%. Ethereum up 7.8%. Cardano up 5%. An important thing that we're looking at right now is with regards to what is going on with Bitcoin and their charts. So we look at the 100-day moving average and the 50-day moving average. We've been tracking this for a couple of days now. And so we're going to throw them both on the screen, but with the 100-day moving average, the important thing is recently we had crossed above it for just a couple of candlesticks for the 4-hour chart. And the thing that happened is we dropped right back down below it, but now it looks like we could be breaking above it again. When we're looking at the 4-hour charts, we've officially crossed back above it. Just barely. So again, if we could see it sustain the break above this 100-day moving average and see it continue to stay above it, well, that could be a sign that we're entering a bull market, because right now we have seen that we have not been able to have a sustained break above this 100-day moving average for a couple weeks. We crossed it a couple of times back on, what date was this? June 13th, we crossed it. We crossed it once on June 29th, but we really haven't been able to have a sustained break. In addition to this, other thing that we are seeing is with the 50-day moving average, similar thing is going on. We're seeing with the 50-day moving average, we crossed above it again. We saw a pretty big break for the 4-hour chart, broke above it. Now we are above. The key thing is, are we going to be able to sustain above that? Thank you. I'm reading some of your comments. Mason the Monkey, what's up? Andrew, Christopher, Paul, you guys have anything you want to talk about? Just throw them in the chat. But so right now with the 50-day moving average, we'll talk about everything at the end. But right now with the 50-day moving average, what we're seeing is that we broke above the 50-day moving average. We're pushing up. If we could see a sustained break above the 50-day moving average, well, then we will be able to continue our way up and potentially reach the new resistance and break through that of $40,000 per coin, because right now we've been in the range of $30,000 to $35,000, $30,000 to $40,000 per coin. The only way we're going to break and get into new all-time highs later this year is if we reach 40,000 and break through that, because that is a key resistance that we have seen for weeks now, really months now, since the beginning of the year, since about February. But let's go over what's going on with Elon Musk, because we got a lot of big things to talk about with him, specifically with the Elon Musk effect, because everyone had been saying for a while, what was going on with Elon Musk. Every time he tweets, the market goes up. Every time he says something bad about Bitcoin, the market went down. We saw that back in February. Tesla came out and said, look, we're going to be accepting Bitcoin as a form of payment. Bitcoin's price skyrocketed. Then, like a month and a half later, he said, we're no longer going to accept Bitcoin. Price tanked. But then he came out and said, look, we will accept Bitcoin as soon as it gets to 50% using like renewable and green energy sources. But it didn't have as much of an impact. Since he tweeted that, we have still just been between $30,000 and $35,000 per coin. And many people, we had talked about this. It's like, if he tweets enough, and if he's tweeting so many times, it's not going to have as big of an impact anymore. And we're starting to see this happen already. We're starting to see that when he is tweeting, it's not causing the price to move as much as it used to. Previously, for example, with Dogecoin, when he would tweet out a picture of a Dogecoin meme or the Dogecoin dog or anything related to Dogecoin, like he did on July 2nd, we would have seen the price used to go up 10, 20%, even 30% sometimes whenever he would tweet about Dogecoin. But now what we're seeing, for example, just with Dogecoin, is that he tweeted about it on July 2nd and we didn't see a big move at all. We didn't see a big move at all for Dogecoin in terms of movement. On July 2nd, we saw it go up like 3% when he tweeted it. It did have a spike as soon as he tweeted it, but it was a spike of 3% versus what it used to be, which was around 20, at least 10%, minimum 10%. And sometimes it could have been 30%. So it's just interesting to see that everyone got so upset with him because he was tweeting, basically manipulating the market. He's probably wasn't profiting off of it because it doesn't seem like that was his intention. But either way, manipulating the market in the sense that every time he tweeted, the price would go up or down. And the thing is, now we're not seeing Elon Musk have as much influence over the market anymore because every time he tweets, the market isn't moving as much. So according to Alexander Clark, sales trader at UK-based digital asset broker Global Block, they said that it seems that investors are no longer listening and are finally realizing that the tweets of one man should not be the deciding factor for whether they buy or sell their assets. And you know, that's the truth. It doesn't matter if you're Jeff Bezos or Elon Musk. It's like, you should always take into account what, let's say, successful people who have made a lot of money through investments, through building companies. It's always nice to hear what they have to say and hear their opinion on it. But they don't know everything about everything. And remember, Elon Musk, first of all, doesn't have a crypto company. So when people follow him for crypto advice, it's like, yes, he has done a lot in the tech world, and I think he's amazing. But what people are realizing is that one person doesn't know the best way to invest, doesn't know the best thing to go about everything. Like even Warren Buffett, people listen to what he has to say, but it's like if he comes, like, ultimately, long-term, the market decides for itself. It's like, yes, if Warren Buffett says he bought something, that stock price could go up. If Elon Musk says something about crypto, used to go up. But eventually, that wears off, and people start to realize, okay, this is what this asset's worth. Should we invest in it? Should we not invest in it? And that's what we're seeing now. We're seeing that, okay, people are still listening to what Elon Musk has to say, but it's just the impact of it. Like, the initial impact is there a lot of the time at the beginning. Like with Dogecoin, we saw like a 5% jump, which is significant, but not as much as it used to be. And long term, obviously, prices are going to find where they're supposed to be. They're not going to solely move up or down based on what one person has to say. Next up, let's speak about what's going on with Robinhood, because Robinhood's IPO documents continues to be revealing new information, exposing new information about their crypto business, exposing information about Dogecoin. And specifically what I want to talk about today is what's going on with Robinhood and their IPO documents and what it revealed about Dogecoin and crypto. So Robinhood, according to their SEC filing, they right now own $11.6 billion in crypto, just ahead of their IPO. Most of it is Dogecoin. And a lot of people have been wondering, does this mean Robinhood is the whale Dogecoin account? There's an account for Dogecoin that owns 28 or 29% of all Dogecoin in circulation, and many people have been speculating for months that this account was owned by Robinhood. So now what we have seen, we looked at the documents. I didn't want to do this video right away. I wanted to talk about it, analyze it, collect all the data first. So after looking at everything, what we realized is right now, Robinhood said about 17% of all of its revenue came from crypto trading. They said that majority of this came from Dogecoin, and one risk for their stock is going to be if the demand for Dogecoin transactions decreases, if people stop wanting to be involved in Dogecoin, and that demand doesn't transfer over to another crypto, well, they said then the financial condition and results of Robinhood could be negatively affected. They could struggle. But so obviously that means they own a lot of Dogecoin, because they said most of their revenue from crypto came from Dogecoin. And so now when we start to look at how much they would actually own, well, we have to look at how big is this whale account. And everyone's been saying, who owns this? This is like on Quora, but they said, who is the Dogecoin whale that owns 28% of Dogecoin? And what we realize is that the whale account owns 36.7 billion Dogecoin. And that would put the value of that would put the value right now at right around, it's at 25 cents. So what's a quarter of that? Right around 9, what is it? 8 billion, 8.5 billion, right around there. So it's definitely possible that they could be the whale account, just because if we look at the whale account, 28% of all Dogecoin in circulation. The market cap for Dogecoin right now is sitting at $32 billion. So it would put the value of the whale account right around $8.5 billion. And that definitely is possible when we consider how much crypto Robinhood holds. They own $11 billion in crypto total. So it's possible that they could be this Dogecoin whale account. It seems a little unlikely though, in my opinion, just because that would mean that $8 billion out of the $11 billion they have in crypto is all for Dogecoin. And I think people buy a lot of, Ethereum, a lot of Bitcoin on Robinhood as well. So I'm not sure if it's the case. Let me know if you guys think different. But just looking at the numbers, it's possible that they are the whale account, but we'd have to look more into the numbers and see exactly how much Dogecoin they own, which we don't know exactly how much they own. But when we look at the numbers, it's possible, because the Dogecoin, the value of the whale account, $8 billion, their holdings in crypto is $11 billion. Moving on, let's go over another thing with Robinhood, which was really surprising. And that's what's going on with Robinhood CEO Vlad Tenev. And essentially what happened is the Fed seized his phone, the CEO of Robinhood's phone, as part of the GameStop trading probe, doing an investigation into exactly what was happening. And they said that it's related to a search warrant that was executed by the USAO to obtain his phone. And the USAO is the United States Attorney's Office. And this is for the Northern District of California, which has been investigating Robinhood and what happened back in January and February during the meme stock rally, the short squeeze with GameStop and AMC. So this is interesting because there's been a lot of bad press around Robinhood recently. People hated what happened with GameStop and AMC. Despite this, what we know from their IPO documents, they grew immensely. They went from 7 million users in March of 2020 to 18 million users in March of 2021. So despite all the negative news and people saying they don't like Robinhood, well, they still grew very, very rapidly. And I've seen a lot of people say this. A lot of people say they hate Robinhood, but most of these people still have Robinhood accounts. Let me know if you guys have one. Like, I have a Robinhood account, because the bottom line is Robinhood is the easiest platform for people to use who are getting into crypto. It's extremely easy. There's 0% commission fees. And if you're looking at Robinhood versus Webull, Robinhood, for example, for options, straightforward, easy. On Webull, options are a little more confusing. So in my opinion, even though people don't always like what Robinhood did, the numbers don't lie. The numbers show us that they were able to grow exponentially, double their business despite some of this negative news, and that's because Robinhood is the easiest platform for people to go to. But either way, with this investigation, they're still investigating what's coming on. They said that currently they're aware of about 50 class action lawsuits related to the 2021 restrictions they put on trading with GameStop and AMC. Everyone was not happy when they started restricting how many shares people could buy, restricting how many shares, like what was going on with options. People absolutely hated that, and they got just wrecked on social media and the news because people did not like it at all. But you got to remember, sometimes even bad press for these companies is good, because they were all over mainstream news for days, I feel like weeks. And when the mainstream media is talking about them a lot, even if it's not great, people are going to start downloading that app, checking it out, seeing what it's all about. And because of that, they were able to grow very rapidly. What the company said, though, is they said right now they're unable to estimate exactly the impact of this negative news coming out from their CEO and the investigations and all these lawsuits from what happened back in January of 2021 with GameStop and AMC. They don't know the exact financial implications of that just yet, or the magnitude of it. They don't know how it's going to impact their business, but they said ultimately it has been damaging their reputation, could potentially damage their financials, but it's just too early to tell how much money it's going to cost them, because all these we all know legal fees, even if you're just one person involved in, let's say, like anything with a lawyer, costs a lot of money. And then imagine when you're getting sued, we have 50 class action lawsuits, you're getting sued by thousands of people, and you're a major, multi-billion-dollar company. These legal fees add up. They paid $70 million the other day after there was a report that came out that they had to pay $70 million for its system-wide outages and misleading communication and trading practices. And, $70 million seems like a lot, and it is, especially, Robinhood isn't like a huge company. They haven't even gone public yet. But when you start adding even more fees and more fees for lawyers and more things going on with lawsuits, $70 million is just going to be the start. They're going to lose a lot of money and have to spend a lot of money to deal with all of these lawsuits against them, to deal with everything that's going on. And so this could hurt them in terms of how much money they're generating. So if you're looking at investing in their stock, I love Robinhood. I think it's a great platform. I think it makes investing so easy. It revolutionized investing. But the one thing to keep in mind is just with Robinhood, if you're going to be investing in their IPO and what's going on initially, for the next couple of months, could be even longer, they're going to have a lot of legal fees, a lot of attention in the media with regards to all these lawsuits. Every time someone talks about Robinhood, a lot of the time on, let's say, CNBC and the mainstream news, they're going to bring up the fact that sometimes retail investors were not happy with how they handled the situation back in January and February 2021. So that could have negative impacts. I don't think it's going to, at this point, I think if people are on Robinhood, they're staying, they're not going to move, because the situation is, they're trying to put it, behind them. It's like over and done with. It already happened. People who left probably already left. But moving forward, it could impact their financials. And let's say in the first quarter of this year, they lost $1.4 billion in revenue in the first quarter of 2021. That's compared to a profit. They had a net income of $7.5 million last year. So last year they made a profit. This year they already lost $1.4 billion in the first quarter. They said this had to do with raising additional capital for emergency fundraising. But you just got to remember that these losses, while they were profitable before, they're growing very rapidly. You have to spend money a lot of the times when you're scaling up and growing very quickly, but also they're going to have to be spending a lot of money in terms of lawsuits, and that could hurt them in a bit. But either way, people have changed their opinion on Vlad quite a bit. At first, people seemed to really like him, he was doing with Robinhood. Now, a lot of people aren't so sure about him, don't really like exactly how he handled the situation. But let me know what you guys think. What do you guys think about Robinhood? What do you think about Vlad? Do you think they are going to be fine? I don't think there's going to be any big issue. But do you think that these lawsuits are going to continue to hurt them? Continue to hurt them for a little bit of time? Let me know what you guys think. A couple people are saying that they don't like Robinhood because they don't have a crypto wallet yet, like Chris. Chris said that, Robinhood, if you want to be involved in crypto at least, it's not the best. They only have a handful of cryptos. They have Bitcoin, Ethereum Cash, Dogecoin, and they might have a one or two more. But for the most part, they have like 5 different cryptos on the platform. That makes it extremely hard for someone who wants to get involved in crypto to buy the coins that they want. Because, for example, even on Coinbase doesn't have all the coins you want to invest in. They've been adding a lot more, but they didn't even have, let's say, Polkadot, which is a pretty big crypto. It's in the top 20. They didn't have that until just the other week, until, about June of 2021. So same thing with Coinbase is we're going to need to start to see these platforms. First of all, Robinhood needs to make the crypto wallet. They said they're working on it. They said that's why they delayed their IPO a bit, because this is something that's been working on behind the scenes, and there's a lot of regulations behind it and, things they have to fill out. But in addition to this, right now with all of these exchanges, they need to make it so, first of all, zero commission. Robinhood has that. They need to have crypto wallets. Robinhood doesn't have that yet because you can't send money to and from places if you buy it on Robinhood. You have to sell it, then transfer it to your bank account or use the debit card. And the third thing is they need to have more coins, because right now having 5 or 6 coins is not good. Not good. Makes it impossible. Makes it impossible to go about investing in crypto. It really does. You know, it's like, how can you build a portfolio when you're limited to 5 coins? When you're limited to 5 or 6 coins, like, how can you really build a portfolio? It's impossible. It's impossible. But anyways, if you guys are just joining us, please be sure to like the video. Let's see if we get this up to 500 likes. Everyone's been asking about my dog Tugboat recently. We'll get him on. If we get it up to 500 likes during the stream, we'll bring him on. Everyone hears him snoring. They want to see him. So if you want to see him, throw the video a like. But that's what's going on with Robinhood. Next up, let's go over a couple of things going on with Cardano. Amazing information came out with Cardano just yesterday. And this is from actually Grayscale. It's a digital asset manager, Grayscale Investments. And they came out and said, look, what we just did is we added Cardano to their digital large cap fund. So when we look at it, this, like the stock ticker symbol for this is Grayscale Digital Large Ordinary Shares. It's at $22.50 per share. It's traded on like the over-the-counter markets, so it's not like on the New York Stock Exchange or the NASDAQ, but the symbol is GDLC. And the important thing about this is that they made Cardano their 3rd largest holding in this fund. Previously, it was not involved at all. So that means they had gone, it has about, what does it have right now? It has $350 million in assets under management, $350 million. And they went from having 0% in Cardano to now right around 5%. So what's 5% of 350 million? What's that? I think it's like $17 million. So they just bought $17 million worth of Cardano. And this is a big announcement because what we're seeing is that investment firms are starting to get more and more exposure to other cryptos, not just Bitcoin, Ethereum, but Cardano. I have a really exciting video on Cardano planned for later. I went on a hike the other day. You guys seem to like that video where I went outside and just chilled and talked with you guys. So I have a video later about Cardano, everything going on between their partnerships, what's going on with Charles Hoskinson in El Salvador, Ethiopia, Tanzania. So we'll talk about all that later. But this is exciting to see that we're seeing major investment firms get more exposure to Cardano. And it was surprising that this Grayscale digital large cap fund didn't have exposure to Cardano, because what they say is that it's supposed to be, it says that the fund's passive rules-based strategy seeks to provide exposure to 70% of the digital asset market. They already had Bitcoin, Ethereum. They also had exposure to Bitcoin Cash, Litecoin, and Chainlink. So it's interesting to see that they didn't have any exposure to Cardano, because when we're looking at Cardano, it's bigger than Chainlink by far. It's bigger than Litecoin. It is one of the biggest cryptos out there. It's number 4, only behind Bitcoin, Ethereum, and Tether. So for them not to have that and just be adding it now is a bit surprising to me, but it is great news for crypto moving forward, because what it shows us is that everyone is realizing the potential of Cardano, how it's more energy efficient than Ethereum, how it is able to process more transactions per second than Ethereum. And me personally, I think that this was a great move. They added Cardano to the list of their potential assets under consideration list. They released a list that we did a video on the other day where they added 18 additional cryptos to this list, where they're saying, oh, we're thinking about adding all of these. They added 18 cryptos. Cardano was one of them. But now officially, when they came out with their report for Q2, they said, look, we added Cardano, and it went from 0% to 5%, so $17 million. Big scheme of things, $17 million isn't a lot, but you got to start somewhere. And this fund has $340 million, so putting 5% of the entire fund into Cardano shows that they believe in it for sure. They definitely believe in it. Put that in perspective, they have 67% of the fund is in Bitcoin, 24% of the fund is in Ethereum, and then the next is 4% in Cardano. So it's still a significantly smaller position than Ethereum or Bitcoin, but I think that'll change over time. I definitely think that'll change over time. They came out on Twitter the other day with this announcement. They said, welcome aboard to Cardano. We have adjusted our portfolio of the Grayscale Digital Large Cap Fund to now include ADA. So it's exciting to see. Charles Hoskinson came out with a little bit of a GIF, and he responded to their tweet. Pretty funny. But yeah, so that's what's going on with Cardano. Major announcement. Everyone says this could open the door for Grayscale potentially having a Cardano ETP, which would be an exchange-traded product, which could be huge for institutional dollars getting invested into crypto moving forward. Because right now, we see that there are Bitcoin, there's like Grayscale Ethereum Trust and Grayscale Bitcoin Trust, but they don't have products related to some of the smaller altcoins like Cardano or Polygon or any of the other ones. But I think Cardano would be the next one to be added to this list of institutions starting to get involved. So if Grayscale comes out, let's say with a Grayscale Cardano Trust, well, then that could be huge. That could get more institutions involved because they do have Grayscale Ethereum Trust. They have Grayscale Bitcoin Trust. I'm invested in both of them. Like, essentially, if you think of these, this is a way for institutions to get involved with Bitcoin, Ethereum, and crypto without directly owning Bitcoin or Ethereum. So it's just a way that they can get exposure to it. Like we can see right here, Grayscale Ethereum Trust currently has $6.6 billion assets under management. So it shows you that this is a way that institutions are definitely getting involved. Grayscale Ethereum Trust owns 100%, Ethereum, follows the price of Ethereum at least, and it's $6.6 billion in assets under management. So it's a significant portion, gets a lot of exposure, gets some institutions involved into these different cryptos. Moving on, now let's go over what's going on with Bitcoin. Bitcoin mining had a record-breaking number just announced, and that's that Bitcoin mining difficulty dropped the most it ever has, and it dropped 28%, the difficulty of Bitcoin mining. This is the largest drop we've ever seen in a 2-week period. Every 2 weeks it's adjusted. And other adjustments that we had seen recently was that on May 29th and June 13th, the mining dropped 16% on May 29th and 5% on June 13th. So to see it drop 28%, that is huge. And essentially everyone's like, why does this matter? Who cares? Well, this matters because right now, Bitcoin mining, it self-adjusts. It adjusts the difficulty level based on how many Bitcoin miners there are. And if there are more Bitcoin miners, it makes it more difficult because only a certain amount of Bitcoin can be mined and added every single week, every single month. It's all programmed into the system. So if there's more Bitcoin miners, they have to make sure that there is still the same amount of Bitcoin being mined. So does that make sense, right? Like if you want to mine, you could just say 10 Bitcoin and there's 10, like, you know what I'm saying? It's like if there are more mining companies competing for the same amount of Bitcoin, they make the difficulty harder. And essentially what happened is when the difficulty adjusts downwards, when it becomes easier, that means there are less miners, and it means that you can make more money if you're a Bitcoin mining company if you stay in line. When it goes up, when there's more Bitcoin miners, it becomes more difficult to mine, and you make less money. So essentially what's happening right now is with everything going on in China, with them banning crypto trading activities, with them banning Bitcoin mining, what we're seeing right now is that all of these, China made up around half of the entire world's crypto mining, Bitcoin mining. And once this was cut off, they said they were banned, they had to leave. Well, now there's all this machinery, all these people, all these companies that have not set up shop yet elsewhere. It's going to take a while for this to happen. And according to a lot of different analysts, they're saying that right now it could take 15 months, 6 to 15 months for all of this idle and shut down mining hardware to migrate elsewhere, set up shop in other countries, other areas, and it's going to take a long time for everything to get back to where it was. So now is better than ever for all these companies in the US that mine Bitcoin, for all these companies in Europe that mine Bitcoin, because as long as they keep the machines running, they could add zero more and still be making more money. So every day we're seeing that Chinese Bitcoin miners are looking to other countries, continuing to look towards Texas in the US, they're looking towards Florida in the US. A lot of companies have even looked in El Salvador in Europe. So it'll be interesting to see what happens Interesting to see what happens with Bitcoin mining and if they're able to set up shop sooner, or if it's going to continue to take a long time for all these Bitcoin mining companies in China that were banned to set up elsewhere. Either way, though, because of this, we saw the largest drop ever in terms of difficulty for Bitcoin mining. Because of this, it makes mining a lot easier and it makes it a lot more profitable. So it's interesting to see that. I see your comment, Mason the Monkey, about Palantir. We'll go over that towards a little bit in the end. Crypto Pinto, we'll talk about your thing also with George Soros. Just throw anything in the chat and we'll talk about anything. TC, what's up? What's up? Yeah, just keep throwing stuff in the chat, and we're gonna go over everything. If I missed anything, we'll talk about it all towards the end. But if you guys can, please be sure to like the video. Let's keep the ball rolling. Next up for this weekend update, we got something going on with the U.S. State Department. They officially came out, basically called out El Salvador and was like, look, you better make sure you're regulating Bitcoin and you keep that under control in your country. They're like, it's like they're like big brother looking over. They're like, you better make sure you do this right. Otherwise, you could be in trouble with countries around the world. And essentially what happened is statements from the U.S. State Department official came out and said, I suggested to the president, I wonder what that means. Is that like, oh, you better do this or else? Or is it just like, oh, maybe you should do this? My opinion, suggested means you better do this or else you're gonna hurt big time from doing business, having partnerships, talking with other countries. But what they said is, we suggested to the president of El Salvador that whatever El Salvador chooses to do, you ensure that it is well regulated, that it is transparent, and that it is responsible, and you protect yourselves against malign actors. They said right now that they also came out with a report that named 14 Salvadorans that are members of the president's regime in El Salvador, and they labeled these 14 people as corrupt and undemocratic actors. In addition to this announcement has made a lot of people think that the U.S. is cracking down on El Salvador for choosing to make Bitcoin legal tender and move away from the dollar. Because what we have seen is that El Salvador used the U.S. dollar for a long time, because their currency in El Salvador not so great, so they looked elsewhere. They used the U.S. dollar. They're not getting rid of the U.S. dollar, but now making Bitcoin legal tender, it makes Bitcoin compete with the U.S. dollar, specifically in El Salvador. If people can use both, people can get paid in both, people can pay at stores with both, well, it puts Bitcoin directly up against the U.S. dollar, specifically in El Salvador. And what it looks like is that the U.S. State Department is not too happy. They're like, look, basically like, look, right now with Bitcoin being used in your country, we don't think it's a good idea. We don't think it's a good idea. And if you continue going about this and you're not putting regulations in place and you're not being transparent about it and you don't have this under control, well, it seems like it could prevent El Salvador from having talks, doing business, let's say, with other countries around the world. We've seen this happen a couple of times already where El Salvador has been getting called out by other countries that use their own currency that may not want to do business or be in talks with El Salvador as much as they previously did. So we'll see what happens. But we got to remember that El Salvador did this in the first place. The first thing is we got to remember Bitcoin. It doesn't matter how many regulations they try and put in place. It doesn't matter like what they try and do. Bitcoin, they don't have control over Bitcoin. They don't. Bitcoin is decentralized. That's the whole point of it. So when the U.S. State Department says that El Salvador has to be transparent, they have to make sure Bitcoin is well regulated. They can't make sure it's well regulated. The U.S. government can't regulate Bitcoin. Like, they're saying that they have to prevent against basically illegal activities, make sure they protect against that. The U.S. hasn't been able to protect against that. It's impossible. Like, they have been able to seize money for illegal activities in the past, but for them to put regulations in place to like limit Bitcoin, and it's really impossible. Like we've seen China do it where they ban it, but still in China, people own Bitcoin. People still own Bitcoin in China if you owned it for a while. So it gets to be very difficult situation because once you say you allow Bitcoin, you sort of release some of that control. When you have your own currency like the US or in the UK or let's say Israel, whatever, the central bank has a lot more control over what's going on because they could limit how much money is in circulation. They could send more money out, print more money. With Bitcoin, it's a set amount of money that's ever going to be mined. Like there's a set amount of Bitcoin that's ever going to be mined. And no matter what the government does, they're still not going to have that much control over it. But let me know what you guys think about this. I think it's just the U.S. is upset. The U.S. is upset that El Salvador has moved away from having the U.S. dollar as like the only currency there. And they're upset that now Bitcoin has come into play and it's sort of going to be competing with the U.S. dollar in El Salvador. But let me know what you guys think of that. So we'll see. We'll see what happens here. I just think they're upset with what is going on there. Next up, let's talk about Ethereum. I saw a couple of questions, a couple of things like Paul. Paul said earlier, he mentioned about Bitcoin and Ethereum ETFs in the US and how as soon as we see these get approved, Paul said how, this is just someone who is in the chat, someone that we talked with earlier, but he was like, look, once Bitcoin and Ethereum ETFs are approved, he thinks that we're going to see the prices really start to skyrocket for all the crypto. And I've talked about this quite a few times in the past. Like I've mentioned this to all you guys, but me personally, I think as soon as we see a Bitcoin or Ethereum ETF approved, first of all, that's going to open the floodgates to say all the other Bitcoin ETFs are going to be approved because we've already seen that the Bitcoin ETF from ARK Invest, they applied for one the other day. We've seen so many companies. There's about a dozen or so applications for Bitcoin ETFs. We see Wisdom Tree have a Bitcoin ETF that was delayed. Valkyrie, which has a Bitcoin ETF, which has been delayed. Vanek has a Bitcoin ETF delayed. All of them, it's the same story. They applied with the SEC. They're delayed. Okay, I get it. But the thing is, once they approve one of these, it's going to open the door, open the floodgates where all of them are going to be approved, and it's going to mean that more institutions are going to be able to easily invest in crypto. It's not going to be like all of a sudden that as soon as one is approved, we're going to see all the institutions pour money in, but it's going to make it a lot easier for them to do it. So if they start to see what's going on in crypto, they could easily invest in a Bitcoin or Ethereum ETF, not worry about regulations because it's just like really investing in any sort of stock or any other asset. When you invest in crypto and you hold crypto on your balance sheet, it brings a whole other world of regulations onto your table, onto the plate for large institutions. So that's why we don't see too many companies do it. We see, for example, Tesla, MicroStrategy, they both own it. We see ARK Invest. They put money into Grayscale Bitcoin Trust, but still for the most part, it's like Square, Tesla, MicroStrategy. Those are the big names. But what we're seeing now is that, okay, none of these Bitcoin or Ethereum ETFs have been passed yet. I think they will be in the second half of 2021, just based on how everything's looking. The decisions keep getting delayed and everything's looking like it's going to line up towards the second half of 2021 or early 2022. And what we're seeing is Skybridge Capital. They came out, they launched an Ethereum fund, which is different than an Ethereum ETF, but they said that they have launched a private Ethereum fund on July 1st. They said they're going to file for an Ethereum ETF, but essentially they don't know when that's going to be approved. They said nobody knows when that's going to be approved. It's just a mess right now. SEC, the SEC says they don't want to approve a Bitcoin or Ethereum ETF because of what's going on with three things. They say, first of all, it's regulations. They can't control what's going on with Bitcoin and Ethereum, so they don't want to approve it. The other thing they say is it's too volatile. They want to protect investors. And the third thing is they say with illegal activity. So for all those reasons, that's what the SEC says, why they haven't approved any yet, but we're seeing so much institutional demand. We see Skybridge Capital, they're going to be filing for a Ethereum ETF. They said they have a full commitment to crypto. They said last year they launched a $25 million Bitcoin fund. It became public in January with $300 million in assets. So we're seeing so much demand for crypto. Every single investment firm has come up with some sort of crypto product. It feels like every single investment firm has come up with some sort of crypto project recently, crypto fund recently, or they want exposure to crypto. So I think it's just a matter of time before we see a Bitcoin or Ethereum ETF approved. And as soon as we see that happen, then I think we'll start to see more institutional investors get involved with crypto, get into the crypto world. And it's not going to be instant, but it definitely will make it a lot easier for all of these people to get exposure to crypto, exposure to Bitcoin specifically, Ethereum specifically, and eventually we'll start to see them get more and more into altcoins. One statistic that I do like to talk about a lot, I'm going to pull this up for you guys, but one statistic I like to talk about a lot with crypto is what's going on with, pulling it up. So what goes on with, I can't find it, but it's fine. One thing I'd like to talk about specifically with crypto is what is going on with retail investors versus institutions. Right now, the entire crypto market has a market cap of $1.4 trillion, 1.44. The thing is this is made up of, people from all over the world. But when we look at the U.S. specifically, only 6%, I mention this all the time, but only 6% of people in the U.S. own crypto, and 1/4 of investors. So 25% of investors in the U.S. own crypto. So obviously we know not everyone in the U.S. is invested in the stock market or invested in crypto. So it makes sense that there's a higher percentage of people who are investors, put money into crypto, than just general people. But that aside, imagine once investors go from 25% of all investors having money into crypto to 100% or 50%. Because I think it's inevitable for us to see anyone who invests in the stock market or for anyone who invests in the stock market, I think it's inevitable to say that, look, if they're invested in the stock market, they're going to be invested in crypto as well. Whether they're going to invest directly in it or if they're going to invest into these Bitcoin or Ethereum ETFs, it's all going to be the same thing. But ultimately, what I think is we're going to see every single person who invests to have exposure in crypto. So that's going to be a lot more money coming in because right now only 25% of investors put money into crypto. The second thing is what's going on with just the general population. 6% of people in the US own crypto, but imagine once that 6% gets to 30%, gets to 40%, and maybe even 100% one day. I think it will. And what we're seeing is that since only 6% of people in the US own crypto, there is a lot of room to grow, a lot of upside, because I think it's inevitable that more people are going to own crypto in the US, whether it's going to be Bitcoin, Ethereum, Dogecoin. I don't really care what it is, but what we do know is that crypto is growing very rapidly. Decentralized finance is growing. And when we start to have more use cases like buying NFTs, and we start to see smart contracts implemented, and we start to see companies, let's say like a competitor to Instagram or a competitor to YouTube or a competitor to Spotify, when they come out and they're like a decentralized crypto, like a decentralized Web 3.0 app, that's going to be when people just want to own crypto. Like a lot of people bought into Ethereum. For example, Jim Cramer, he bought into Ethereum because he said he wanted to buy an NFT. He wanted to buy an NFT, so he had to have Ethereum. So I think that's what we're going to see with the entire US population is when there starts to be better companies, better projects, better use cases developed for crypto, people are going to just want to get into crypto, even if they've never owned it before, because there's something else they want. For example, NFTs. Perfect example. Jim Cramer wanted to get an NFT from Time Magazine. He didn't end up winning it, but that was the reason why he bought Ethereum in the first place. Now he says he actually likes Ethereum more than Bitcoin. So when we start to see things like that happen, that'll be when people get involved in crypto, because someone, for example, who has never invested in stocks, never invested in crypto, it's harder for them to get involved. It's scary. They don't know what's going on. Dogecoin has, broken down those walls significantly. People like Dogecoin. It's fun. It's easy. It's less than $1 per coin. It's easy. Bitcoin is more intimidating. But so I think Dogecoin has definitely helped get more people involved. Ethereum and NFTs have helped more people get involved. And ultimately, I think we're going to continue to see this trend increase where as more people, because right now it's only 6% of US population invest in crypto, as that gets to 10%, 20%, 30%, I think we're going to see the market really take off. And remember, that's just retail investors. That doesn't even take into account what's going on with institutions. Institutions right now, most institutions don't own crypto. What we're seeing is that hedge funds own most hedge funds don't own crypto, but according to a recent study done by on 100 of the top hedge funds. They said that by 2025, they're expecting to hold 7% of their portfolio as crypto. 7% of their portfolio they're expecting is going to be crypto within the next 5 years. So forecasts and analysts, according to the data, they see that this could add up to $312 billion additional capital coming into the crypto world. $312 billion. That is huge. Obviously, it's not going to be all of it, but if what they're projecting turns out to be true, 7%. If just that 7% number comes true, that's going to be $312 billion coming into crypto. And that alone could be huge, because right now the market cap of crypto is sitting at 1.44 trillion. So $312 billion additional, that's like 30% of the entire crypto market cap. That's a significant portion of money. And I think it's inevitable. What we're seeing is that Cathie Wood in ARK Invest, she's come out and said, look, as institutions start to allocate single digits of their balance sheet into crypto, that's going to be when we start to see the prices take off. But she's not just talking about hedge funds. Cathie Wood said Bitcoin's price could reach 500,000 if institutions allocate single digits of their balance sheet. But what she's talking about is everyone, not just hedge funds, but like Coca-Cola, Procter & Gamble, just the regular standard everyday companies that you would say that right now have nothing to do with crypto. But eventually we are going to see all companies keep some sort of crypto on their balance sheet. We've seen GM come out recently and say that at first they said, we don't want anything to do with Bitcoin. Then they said, well, customers seem to want to pay with Bitcoin, so maybe we should accept it. Maybe we should accept it. And I think we're going to see more people and more companies do that. If people want to come to your business and pay with crypto, I think what we're going to see is that they're going to offer crypto. They're going to offer Bitcoin. They're going to offer Ethereum. And if they do this, they're going to actually have to keep some Bitcoin or Ethereum or something like that on their balance sheet, some sort of crypto on their balance sheet. It's just going to happen as more people get involved, more people want to pay. Because if you're a business owner, do you really want to lose your business because someone wants to pay with a different form of currency? And people might say Bitcoin isn't a currency. But the company, who cares? If you're Kroger's and someone wants to pay with Bitcoin, it's like they could just do immediate if someone pays for something, it could immediately be sold off and converted to cash if they wanted to. It's not like it has to be locked. It's just like if you pay with a euro, if you pay with a US dollar and you're in let's say Europe, they don't accept, you can pay with US dollars basically anywhere, but that's not the local currency. So still, there's always those exchange rates that fluctuate. Obviously, it's not nearly as much, and you can't say, I get it. You're going to say, Michael, you can't compare, the euro to the US dollar as, US dollar to Bitcoin, and I get it. You can't. But ultimately, the same thing is with both of them. They both can be exchanged back to US dollars. So if you're a business, you're not going to want to lose out on business simply because someone wants to pay with some other type of currency. If there's a lot of people who want to do it, I think we'll see them change over. But that's what we're seeing with hedge funds, expecting to have about 7% of their assets into crypto. And lastly, one thing I do want to talk about also is what is going on in Germany. The floodgates officially opened in Germany for the entire crypto world. We spoke about this yesterday, but I want to talk about it again because this is a complete game changer. Germany is one of the largest economies in Europe, and what we're seeing is that until just the other day, German funds were not allowed at all to get exposure to crypto. But now with this law and it being passed, they can allocate 20% of their entire fund into crypto, which would equate to $415 billion. This probably not going to happen. Not all 20% will be allocated. This is different than what we spoke about earlier with hedge funds wanting to allocate 7% of assets into crypto. Because remember, this was a study. This was a study done on the top 100 hedge fund and managers of hedge funds. This was a study done, and this is what they said they expect, 7%. That's $312 billion. This law in Germany is different because this is just giving them the opportunity to invest 20% into crypto. That's different than saying, okay, you have you can invest up to 20%. That's the opportunity, that's the maximum, versus hedge funds in the US which say we will allocate 7%. We're expecting to allocate 7%. There's a big difference. But either way, This would be able to add up to $415 billion into crypto. And this is huge. This is really huge because these special funds in Germany previously were not allowed to invest in crypto. And because Germany is doing this, because they passed this law, it could open the door for more European countries to follow suit and do the same exact thing. We've seen Germany come out with a law for Coinbase, recently approved Coinbase as being a custody. They could hold crypto accounts, crypto in the country, and that was a big deal. So we'll see what happens here. But that's really what's going on with the crypto world this morning. Throw anything in the chat that you want to talk about. And we'll see exactly, we'll talk about a couple things for a couple of minutes. If you guys want to stay on a bit longer on this Saturday, let's see if we get the video up to 200 likes. If you want to stay on a bit longer, and throw something in the chat. If you have a question, make sure you like the video and also throw something in the chat. But anyways, okay, let's look at the chat right now. Andrew, a lot of people were talking about Robinhood for a while. So one thing with Robinhood that I want to talk about is with Robinhood, they had their documents for their IPO, but me personally, my experience with Robinhood is I've had a couple of big issues in the past. Nothing like that would get me off the platform, but I have gone on Robinhood I've gone on Robinhood in the past and looked at my account and seen like a negative balance. And that's one of the reasons why one person had committed suicide a couple years ago because of that. But I had seen the negative balance, and it was like in the middle of the night I looked at it, at my account, and it freaked me out a bit. But ultimately I knew I didn't have any money on margin. I didn't really have any options. It was just like straight investments. So it was a complete just error and glitch in the system. But because of that, people have not liked the platform at all because of these glitches that sometimes happen with people's balances, because of how they handled the situation with AMC. But ultimately, you know what? Some of the reasons they've said for these issues, which I understand, but you never want to see with any of your money, is that these issues have prevented people from buying and selling, prevented people from doing certain activities, but they've listed this as one of the risks. They said, look, one of the biggest risks of investing with Robinhood right now, they said this on their IPO documents, is that they've grown so rapidly. They went from 7 million users to 18 million users. And because of that, they're having a lot of growing pains. It's completely different managing a business that has a couple million users to nearly 20, 25 million people. They were handling $19 billion in assets to now handling $90 billion. So scaling up and growing as your user base grows is not the easiest thing to do, and it's no excuse, but it's not as easy to do. So yeah, I have had bad experiences with Robinhood in the past, but ultimately I think it's an easy platform. I still really like it, so I'm going to continue to use it. TC, new member, enjoying the stream. Good, clear, and concise. Thank you. Zach Wolf, imagine if El Salvador president called a U.S. official corrupt and undemocratic. I mean, I'm sure it's happened plenty of times. Holly Gravy, long-term holder. True. Yeah, I agree, Holly Gravy. Robinhood makes everything look easy, no matter if you're investing in options, if you're buying shares of a company, if you're doing crypto. I think it's very easy no matter what. So yeah, that's what's really going on with crypto. The market right now, we'll wrap up with this. Market right now is up 4%, 3.7% over the last 24 hours, about a $1.43 trillion market cap. Ethereum is really driving the gains today. It's up 5%, up 25% over the last 7 days, which is higher than any of the other cryptos in the top 10 in terms of the 7-day return. I've been buying more Cardano, more Ethereum lately. I did a video on Cardano, which I'll be playing for you guys a little later. I hope you guys like that. So make sure to have your post notifications on. Make sure to like the video, because I'm getting tired of hearing people say, Michael, why do your videos why do you have 250,000 subscribers and only get this many views? I don't know. YouTube deleted my account. Since then, it's been out of whack. We used to get like 80,000 views on average. You can look at my previous videos. We'll get back there, but it's getting annoying to see all the comments saying, why does this happen? I mean, I guess it's a good sign because it shows that people are like, oh, your videos are pretty good. Why do you have so few views? I don't get it. That's what everyone's comments are. They're like, I don't get this. Why does it you have a lot of subscribers and not a lot of views? It's because like they see my videos and they're pretty good, so it's just confusing. It like messes with everyone's head. I don't know. If I knew, I'd fix it, guys. I promise I would fix it. But I hope you guys have a great weekend, great rest of the day, and I'll see you guys a bit later. See you guys.